Hello, in this video, Robert Kiyosaki is talking about return on investment, but he suggests maybe should it be return on information. Video number 53. Please join me. Hello, welcome to Take a Step to a Better You. In this video, we continue to read the book, The Cashflow Quadrant, and written by Robert Kiyosaki, the one who wrote the famous Rich Dad Poor Dad book. And in this one, he's just talking about return, the concept of return on investment. If you are new, my name is Sherifa Nakalema. I'm a business owner here in Virginia, USA. And on here, my subject matter is like money, business, personal development, motivation. That's what I like to talk about. And if you are new and you think those are good topics, relevant topics in your life, please consider subscribing to the channel and click on the bell that comes up so you are notified when I have new videos. And for those of you who chose to be here and support me daily, especially daily, those who keep coming back, I see you in the comments. But when you don't leave a comment, I never know if you are here. So please leave a comment, and especially if you have a YouTube channel, I'm going to check out your YouTube channel. Whatever I do, I'll say, who is this? Especially when I see a new name, I want to know. So please do that, and thank you for your support. Please share the videos. And today, we continue with the book, The Cashflow Quadrant. We are getting there, Today he decided to, is like concluding the topic of investment, and then Robert is talking about return on investment. But he says maybe it's return on information. So, but I have to share my schedule. Sorry for you who keep watching it every day. I have to do it. I'm here 12:30 p.m. USA Eastern Time. Monday, Tuesday, Wednesday, I tend to read the books. These books, especially. I don't know if I'm going to continue to do that. Let's see after I finish this one. If I'll be covering 3 days with just that. I may introduce some other things. Then on Thursday, I drive around or I interview someone. Friday, I come live. Saturday, I come live again, but this one is for affiliate marketers only. If you are interested in earning money online, affiliate marketing, come. Be here on Saturday, and then Sunday is motivation. So all of them are supposed to come at that time, but then I tend to move the lives because of the people where they are. Some people are about to sleep, so I try to move them lower in the time, my time. Some of them may not come at 12:30 p.m., but I schedule things, especially when the time is not regular. I schedule them. So please click on the bell. Make sure the bell is clicked so you know when I'm here. And also this book, they call The Cashflow Quadrant, because Robert says we earn money. Money comes to us through 4 quadrants. That's according to him. Either we are an employee on the left, or you're a self-employed person, or you are a small business owner, or on the right, you're a large business owner, or you are an investor. That's what this whole book is all about. The quadrant. And this is video number 53. He's talking about return on investment, but in fact, all the whole chapter, I'm about to close this chapter, by the way. Only one more video. This chapter will be done. And the whole chapter was covering the 5 levels of investors, what he called them. So please, if you want to know the 5 levels of investors, since I started, I looked it up, starting from video 40, all the way coming up. They were all about the 5 levels of investors. So you can go back. I have, at the end of this video, I have an end screen. It takes you to all of the videos, but you can skip if you're only interested in this, starting video number 40. And then I'm linking also. Let me link all the videos starting from 0 this time. The link in the top comments will take you to all of them, and then also in the description, so that you can get to know what you have missed. Okay, and so that's the history of what. But if you want to get to the audio book is free for 1 month. The link in the description. If you want a physical book, also link in the description, but also links are also on my website, honestsolve.com. So what does he say in 53? Okay, he says, remember we've been covering investing and level investors and all that. And now he says, I named it. I choose to name the videos. But according to him, this is how he starts. He says, a final word on investing. Remember, I called it return on investment. So I see what he's really talking about, and then I name the video. A final word on investing. In the world of money, you'll often see the term ROI, return on investment. Depending upon whom you talk to, ROI will vary. For example, if you talk to a banker, or he or she may say, we pay 3% interest on your money. I mean, they pay you 3% on the money you have in the bank. For many people, this may sound good. If you talk to a financial planner, they may say, you can expect a return on investment for your, let me read it properly. You can expect a return on your investment of 10% per year. To many people, a 10% return is exciting. To most people, especially those in the E and S quadrants, the higher your return, the greater the risk. So the person accepting a 10% return already assumes there is more risk in that investment than the 3% return from the bank. And there is. So it's true. It's true. Ironically, both the 3% return from the bank and the 10% return from the stock market are extremely high risk. The money in the bank is at the risk due to inflation and higher taxes caused by the bank's printing money. The 10% in the stock market is at the risk due to volatility caused by HFT, high frequency trading, and due to the novice trade investor investing without insurance. In my world, ROI stands for a return on information. Return, he just changed the I from investment to information. Return on information. This means that the more information I have, the higher my return and the lower my risk. I caution you because what I'm about to say may sound insane or too good to be true. Yet, I assure you, it is true. In my world, the world of a level 4 and level 5 investor, an infinite return is expected. And with low risk, an infinite return means money for nothing. In other words, investors receive income without having any of their own money in the investment. In an earlier section, I wrote that I took a real estate course in 1973 after looking at over 100 investments. I purchased a condo on Maui using 100% of financing, which means I used none of my own money. I put $25 each month into my pocket. That 25 was an infinite return on my investment since I had zero invested. And I quote from that section, my real life education had begun. I was learning to use other people's money to make money, a skill a true capitalist must know. I know $25 a month is not a lot of money, yet it was not the money that was important to me. It was learning a way of thinking, a way of processing information and producing a result. One of the reasons that I have so much money today is simply because I was educated and trained to think differently. If you have read Rich Dad, Poor Dad, which I always recommend, you may recall that the title of the first chapter is The Rich Don't Work for Money. One of the reasons why those in the E and S quadrant have problems with that statement is because most went to school to learn to work for money. They did not go to school to learn how to have other people's money work for them. When Kim and I started the Rich Dad company, we borrowed $250,000 from investors. We paid the money back once the company was up and running. Today, the business has returned multi-millions of dollars, not only to Kim and me, but to companies and individuals associated with Rich Dad. As I said, capitalists are generous. My point is that the moment a person knows how to make money out of nothing, or with other people's money, or a banker's money, they enter a different world. It's a world almost exactly the opposite from the E's and S quadrants world of hard work, high taxes, and low returns on investment. The reason most people believe saving is smart and the 10% return in the stock market is worth it is simply due to a lack of financial education. Your best return on investment is not a return on your investment. Okay, he used ROI. Now ROI may not be something else. So let me read it the way he wrote it. Your best ROI is not a return on your investment, but a return on your information. This is why a financial education is essential, especially for the uncertainty of the world ahead. Remember this about the word education. Education gives us the information to turn information into meaning. In the information age, we are drenched with financial information. Yet, without financial education, we cannot turn information into useful meaning for our lives. In closing, it's about to end. I'm also about to end the video. In closing, I say the I quadrant is the most important quadrant for your future. No matter what you do for a living, how well you do in the I quadrant will determine your future. In other words, even if you make very little money in the E or S quadrant, financial education in the I quadrant is your ticket to freedom and financial security. For example, my sister is a Buddhist nun. She earns nearly zero in the S quadrant. Yet, she attends our investment courses and has steadily been increasing her financial education. Today, her future is bright because she stopped saving money in the bank and buying mutual funds and began investing in real estate and silver. In the 10 years between 2000 and 2010, she made much more money in the I quadrant than she could ever make as a nun in the S quadrant. I'm very proud of my sister. She may be a nun by profession, but she does not have to be a poor nun. That's the end of 53. So what I got from that, I think I agree, return on information, especially now. And there is information everywhere, but then you have to be careful where you're getting your information. So once you find the right place to get the information, let's get the information. That's how I end this one. Yes, not return on investment, return on information. The next video will be ending the chapter. And he does it I may end the chapter and I also read a little bit ahead because I'm looking at what I'm going to cover. But he's saying that before we go on, here is a big question. Before reading further, here's a big question. That will be the next video. If I find that it's too short, I'll start also on the next chapter. The next chapter will be chapter 6. And he says you cannot see money with your eyes. I wonder what he's going to cover with that. He's very, very interesting. I find him very interesting, especially the way he uses the language, save as a losers and all that stuff he says. Okay, please leave a comment for me. What do you think? Return on information or return on investment? What do you think? Are you working your way? Are you learning? Are you promise? You promise you finish this book with me? Me, I'll be here as long as I'm still alive. I'm going to continue to read it until I finish it. Leave a comment for me. Please like the video. Please share it. Like I always end them, I say, take very good care of yourself. Take very good care of your families. Take very good care of your health. Take a step to a better you. Bye-bye.